So you can see a clear variation in total returns on the 2-year returns, also on the 1-year returns, and the 6-month returns as well. Some clear outperformers, some clear underperformers. Also, why are there significant drops in some of these ETFs right at the end of the period? What's up, you guys? Welcome back to the Average Joe Investor channel. We are continuing our search to look at all of the high yield income ETFs that are out there and available to average Joe investors. Defiance, Neos, Roundhill, YieldMax, and now we're looking at all 30 of the Global X income ETFs. Most people, when they hear Global X, they think about QYLD or maybe XYLD, RYLD, maybe some of the other ones like QYLG and RYLG. But the truth of the matter is there are a whole lot more income ETFs to look at from Global X. In this video, we'll do a brief overview of all of the income ETFs just to make sure we understand what they are, what they track. Then we'll take a look at the spreadsheet. Then we'll look at income and total returns, net asset value for the past 6 months, past year, past 2 years. Then we'll look at some great graphs to show all of the details all at once. Hopefully you know by now, I never want to waste your time and I always want to add massive value every time I create a video. So with that said, let's dive in. Okay, here are all of the Global X income ETFs. And like I mentioned, there are 30 of them. And there are significant differences both in assets under management, but also expense ratios and dividend yields. By far the largest of these ETFs is QYLD with over $8.4 billion in assets under management, followed way behind by XYLD, then MLPX, one that most people I think have never heard of. We've got PFFD, MLPA, and then RYLD. All of them have over $1 billion in assets under management. Expense ratios are rather similar across the board here. Most of the ones that sell options or utilize options here are around the 0.6 to 0.7% range, which is certainly high relative to the types of index ETFs and index funds that have, 0.01 or 0.03%. But from a options perspective, that's a pretty low compared to some of the other option income ETFs out there, around 1 to even more than 1%. The good news with these funds is most of them have at least a 2-year history. In fact, if we sort this from oldest to newest, we've got all of them have a 6-month history, obviously. Then we've got, from a 1-year perspective, we've got all but 2. And then from a 2-year perspective, we have all but 6 of them. And distribution yields vary as well. If we sort this from largest to smallest, we have some heavy hitters here. XYLD is at 17%. Then we got 12, 11, 11, a number of them actually at the 11% range. The big question when it comes to distribution yields, dividend yields, is whether these distribution yields are based on legitimate income or because income has stayed rather constant, even declined a little bit. But that increase in yield is because the actual net asset value, the NAV, has gone down significantly due to an unsustainable type of income strategy. Now you notice when we look at these lists here, a lot of them, like QYLD, XYLD here, RYLD, a lot of them utilize the term covered call ETF in there. For all those that show covered call or covered call and growth ETF, what that means is they own the underlying index, okay, whether it's the NASDAQ 100, S&P 500, Russell 2000, and then in addition to that, they have an overlay, an option income strategy where in addition to maybe collecting some distributions from the underlying stocks in the index, they also sell generally at the money, okay, at the money, 30 days out, covered calls to collect a significant amount of income. Now, when you do this though, you do give up all potential capital appreciation. Now, some of these like QYLG, XYLG, what they do is they do an option income overlay on only half of the portfolio. So you get more of a balance between capital appreciation and income. Others of these ETFs like Super Dividend US, Super Dividend REIT, all these are just a collection of high yield underlying stocks. Then you have some here which get a little more interesting, such as QRMI and XRMI, which include the ability to purchase put options as some level of protection. We'll see if that's actually worked. And then you have some sector ETFs as well, like TYLG, FYLG, which essentially are doing the same thing as XYLG and QYLG, except for they're doing it based on sectors instead of an underlying massive index. Just as an FYI, this video is not a recommendation in any way to invest in any one of these income ETFs, to utilize Global X in any way, shape, or form. It's just merely looking at the historical results, looking at the income, and then eventually taking all this data and putting into one massive, huge, what I like to call ultimate income ETF spreadsheet to see how they perform over historical time periods compared to other fund families as well. All right, with all of that out of the way, again, I urge you to do more research. If any of these look interesting to you, go to the Global X ETF website, learn more about the underlying index that they use, the strategy they use. First thing we're gonna do is look at the 2-year returns from the end of 2022 to the end of 2024. And we've got all but these 6 down here. We do not have access to XYLE, QYLE, DYLG, EMCC, MLPD, and QDCC, and that's because you can see here all of these were launched in 2023, or in this case down here, 2024. All right, and I got some feedback here regarding putting portfolio balance versus net asset value. Just to be very clear here, when I say income, I'm talking about the actual cumulative income earned during the time frame, and this is assuming we're going to look at two time frames, living on the dividends and then reinvesting dividends. What that means is in this scenario here, we are actually taking the income as it's received to us and we're going to live on it. We're not going to reinvest it, okay? And then over here in reinvesting distributions, we're, instead of living on the income, we are taking all the income we earn and reinvesting back into more shares of that ETF to hopefully grow that income in the future, as well as that portfolio balance in the future. Now, we've got income, net asset value, and total returns here in this section. Income, again, cumulative income. Now, net asset value assumes that if we invest at the very beginning of the period, $100,000 as a lump sum contribution to the account, to this specific investment. And then we do not make any additional contributions. $100,000 at the beginning of the 2-year time frame, the 1-year time frame, and the 6-month time frame. What happens to that $100,000? Irrespective of the income, okay? Does that $100,000 go up in value? Woohoo! Or does it go down in value? Boohoo! And then the total return here just factors in both the net asset value after the time frame, as well as all of the income earned along the way. Same thing over here with reinvesting distributions, total income received during the time frame, as well as the net asset value from a total return perspective at the end of the time period. Okay, let's dive in here. First thing we're going to look at is income. Cumulative income, top results here for the past 2 years, sorted from largest to smallest. Top result here was QYLG at 36,941, followed by XYLG at 31,302. Now you might be thinking to yourself, shut the front door, Joe. How is it possible that QYLG, XYLG, these funds are outperforming QYLD and RYLD, which only have a full amount of option income overlay, whereas the LG funds only have 50% overlays? It doesn't make sense logically, so I had to dig a little bit deeper to find out what happened. By the way, down here looking at all the tabs, this is where all the individual ETF data is housed. So if we go to QYLG here, you'll notice we're going to scroll over here to the left. We've got at the top here the contribution of the lump sum amount, the name of the ETF. You'll notice here that these distributions are rather normal, reasonable, 11 cents per share, 12 cents per share, 12. But if you go all the way down to the end of 2024, something interesting happens. Boom, right here on 12/30/2024, a massive distribution. And the amount of 22 or 25,000, depending on if you're reinvesting distributions or not, $22,288 in total here, based on a $5.30 per share distribution. We actually saw this across multiple of the QYLG or LG ETFs for their distributions. Massive distributions, what appear to be one-time distributions. So make sure you factor that into the results. You're going to see that on the graphs here where there's just a big spike in income and a big drop in net asset value, because when distributions happen, they directly affect the net asset value. So it's cash coming out of the ETF. So just factor that in here. It will all balance out when we look at the total returns. Worst result here by far was QDIV at 67.13 and 73 cents. There were quite a few here in the 11 to 15 to 16,000 range here. Some of the more moderate players in this range, from about 21,000 to 28,000, QYLD, QRMI, TYLG, XRMI, etc. Now let's look at net asset value. Largest to smallest here, top result here was MLPX, which might be a surprising one here. Global X's MLP and Energy Infrastructure ETF worth $139,000. We had 132 for TYLG, which is the technology sector covered call and growth ETF. Then we had 118, 116, and 112 for FYLG. Now from a total return perspective, which is going to be that combination of income and net asset value, sort this from largest to smallest. Top result here was TYLG at 156. Then we've got 155 for QYLG, 151 for MLPX, 137 for XYLG, and then in fifth place here, QYLD at 136,671. Now, if we look at reinvesting distributions along the way, we're going to see higher income and hopefully a higher net asset value. Let's go largest to smallest here. Top results here, QYLG, then XYLG, RYLG, then QYLD, and then QRMI. So very much from a net asset value perspective, we've got right here, TYLG, QYLG, MLPX, and then the last two in the top 5, QYLD and XYLG. All right, let's look at the 1-year returns for the year 2024, which is going to encompass January through December of this previous year. We'll start with income. And we have access to 4 additional ETFs that we didn't have in the 2-year returns right down here: XYLE, QYLE, DYLG, and then EMCC. We don't have access to MLPD or QDCC yet. So we're going to go ahead and sort here. First, we're going to look at living on the distributions as opposed to reinvesting distributions. First, we'll sort by income. Those top 5 for income were QYLG, XYLG, RYLG, QYLE, and then XYLE, all based on covered calls or covered calls and growth. However, if we point to the net asset value, we're going to get some different results. Top result here was MLPX again on the net asset value, so 135,269, followed way far behind at FYLG at 114, then 113, then 110, and then 106. However, if we combine that income and that net asset value, we're going to get total returns here. Top results, MLPX at 141, blows away the competition over the past year. Then we've got QYLG and XYLG, then TYLG here, QYLE, and then FYLG. So what you'll notice here is that there's a big emphasis on, from a performance standpoint, the balance or the blend between covered calls and growth really outperformed within the Global X fund family. Turning our attention to the reinvesting distributions, again, income is all being reinvested back into underlying shares of the ETF. Sorting first by income, the top results here were QYLG, XYLG, RYLG, QYLE, and then XYLE, which is very much similar to living on the distributions. Those high amounts, again, based on those massive distributions at the end of December. And if we look at the net asset value, go ahead and sort there, largest to smallest, we had, again, MLPX at 142, followed by QYLG at 124, then down here QYLE, TYLG, and then XYLG. Lastly, let's turn our attention to the past 6 months, June through December 2024, and we get access to all 30 of the Global X income ETFs. Top results for income were the same ones we've been seeing so far, with a few small differences: QYLG, XYLG, RYLG, DYLG, the Global X Dow 30, and then QYLE. Let's turn our attention to the net asset value here. Top results were MLPX, again, we're seeing that one again, FYLG, TYLG, MLPA, that's a new one, and then XYLD. And then if we combine that net asset value with total income, for a total return perspective, top results here were MLPX again, QYLE, FYLG, QYLG, and XYLG. Now again, this is just living on the dividends where the total return is based on the income we receive and the net asset value. Whereas here we're going to turn our attention to reinvesting distributions, again, where income is all going back into more shares. So with income, we'll see here the top result is QYLG, then XYLG, then RYLG, DYLG, and then QYLE. The very same results from an income perspective that we saw with just living on the distributions. But if we look at net asset value, or I guess in this case total returns, we get a slightly different variation. Only because there's such a close range here between these 4, all right around, or 5 really, all around 113. So the top results here are MLPX, QYLE, FYLG, XYLD, and then TYLG here. And small differences here, whereas we saw XYLD and TYLG were not part of the top 5 here, the difference between the income pushed them over the line with respect to reinvesting those distributions. So let's scroll down here. Let's take a look at some of the graphs here, which gives us a little bit of a different viewpoint here, where it shows not only what the results were, but also how those differences occurred throughout the time frame. So this is the 2-year return where we're not reinvesting distributions. You notice here that throughout the entire time frame, there's clear outperformance here from the green line, which is TYLG, and the blue line here, which is QYLG, whereas most of the rest of the ETFs are bunched here in the middle. If we scroll over here, we'll take a look at the total returns. Here, you see that the green and the blue are outperforming very well. There's this blue line that has a resurgence right here. That's MLPX that outperformed at one point here near the end of the time frame, but at the end here, it actually came down and finished in 3rd. No clear underperformance across all these ETFs, but there were some here down in the $100,000 to $110,000 range. And then here's the cumulative distributions, and this is where I told you you're going to see that view of those massive one-time or non-recurring short-term or long-term capital gains distributions. We see very clear and normal distributions or accumulating distributions throughout the time frame. However, there's a few lines here that pop up significantly right at the end of the time frame. Those are those massive distributions in some of those covered call and growth ETFs. The clear underperformer here from a distribution standpoint is QDIV, which I'm assuming has some very high quality dividend stocks that just don't have cumulatively very many distributions compared to some of these other ETFs. For the sake of time, I'm going to skip the 1-year returns. If you want access to that, you can certainly get access to the spreadsheet or by joining the Average Joe Investor Patreon community. There'll be more about that at the end of the video. Let's go ahead and move down to the 6-month returns. Same data we'll look at as we saw with the 2 years. So we've got here all of the ETFs, and we noticed that the blue line here was a clear outperformer. That's MLPX, which is miles above the rest of the other ETFs. And then this green line down here was down at the bottom throughout the entire time frame, and then finished down with the few other ETFs here. That was SDIV. And you see that the corresponding drops here. Remember how I was talking about those massive capital gains distributions? When we're talking about the net asset value and the income, you should see a polar opposite result here. We should see the income pop up, and then the net asset value drop down almost by the exact same amount, which is what we see. And we can remove that by looking at the total returns, which balances out those two different metrics. We can see that the blue line here was MLPX outperformed the entire time frame. Most of them were bunched here between $115,000 and about $105,000. The 4 clear underperformers are down here in green: SDEM, followed by SDIV, then HYLG, and then EFAS. And then here are the 6-month distributions, cumulative distributions during that time frame. You see it's kind of a lot of information going on here. What you see is clear, massive pops here in these ETFs that popped up in the total distributions because they had that massive one-time non-recurring distribution. And then most of them ended right here in the $3,000 to $6,000 range for the 6-month period. The clear underperformer, again, like we saw in the others, QDIV. So some key takeaways here. Obviously, every different time frame is going to be different here. You'll notice that a lot of the blended income and growth ETFs perform the best during most of these time frames, whereas we saw others like energy and infrastructure outperform during the shorter time frame and the 1-year returns. Different time frames are going to show different results. The future is not necessarily going to be based on what happened in the past, so make sure you do your due diligence, make sure you look at these ETFs deeper, and then compare that and correlate that with what you were trying to accomplish, because not every investor is trying to accomplish the same thing. Some people need income now, others need more of a total return capital appreciation perspective. A lot of that is based on age, but not necessarily. Every average Joe investor has different goals and objectives. If you want to get access to this spreadsheet and all of the other spreadsheets I create on the channel, make sure to check out the Average Joe Investor Patreon community. There's a link down in the description below. In addition to the spreadsheets, you get access to an amazing Average Joe Investor DIY investor community. We can learn from others and get more access to me. Again, if you want to learn more, check out the link down in the description below. Also, make sure to leave your 2 cents down in the comments. It's my goal to respond to as many of those comments as possible on the day I post a new video, and I'm always interested to see your feedback, any questions, concerns, and of course recommendations for future videos and other fun families you want to be included in that massive ultimate income ETF spreadsheet. That's all I've got for you guys. Have a great rest of your day, and thanks for watching.